Hello and welcome to the Business Standard Morning Show. I'm Nazia Iqbal and here's a look at the stories for the day.
What the world needs now is people who see energy a little bit differently. Because seeing a more sustainable world isn't far in the future. We're building it now. GE, building a world that works.
Against the backdrop of an ongoing war, raging world inflation, and looming climate change threat, over 2,500 global leaders from government, business, and civil society descended in the Swiss mountain village of Davos for 5 days. The event was the World Economic Forum's annual meeting, which took place physically after 2.5 years. And it ended last Thursday with a call for unity and a win-win world. But is the world order and its economy shaping up like that? Is there a win-win situation for everyone? Probably not everyone thinks so. Our next report stitches together the highlights of the event in which India emerged as a bright spot.
Davos might have missed some big names and even bigger countries this time, but India went with the aim of making a mark. Attendance from China, Japan and Korea was sparse this year, and of course we heard nothing from Russia or much from Ukraine attendees. This is what Gautam Adani, chairman of Adani Group, wrote about his experience at Davos 2022. Even as the world's rich and powerful descended on Davos, the sentiment at the World Economic Forum's annual meeting wasn't the same as before. Consider the conspicuous absence of many titans of finance. According to Bloomberg, the chiefs of JP Morgan Chase and Goldman Sachs were not in attendance. Neither was BlackRock Inc.'s Larry Fink or Blackstone's Steve Schwarzman. Meanwhile, nearly 100 participants and dozens of political leaders from India attended the World Economic Forum and presented the country's position on the energy situation, food security, and health equity at Davos. And India's enthusiasm was well founded. Here's what Business Standard reported from Davos. India found itself at the center of many dialogues on emerging issues, ranging from climate change to crypto technologies. European business leaders were eagerly scouting options for diversifying trade and investments. India appeared to be the best option for most of them, thanks to its political stability and reformist policies. Many global investors endorsed India's rising economic relevance. For example, Saint-Gobain global CEO Benoit Bazin said that the company plans to invest over 5,500 crore rupees in the next 4 years in India. Bazin was bullish about the 45 billion euro company's growth story in India. David Rubenstein, co-founder of the private equity Carlyle Group, told reporters in Davos that India has been more attractive to buy assets of late than China. Clearly, India benefited from the absence of China and concerns over its heavy-handed zero-COVID strategy.
India's strategy at Davos 2022 is very clear: to present itself as a stable, dynamic, growing emerging market at a time when Europe and US are troubled by the war in Ukraine. At the same time, issues of uncertainty in the markets as well as rising specter of inflation is worrying global investors. India has made sure that the state governments and the central government are aligned on the positioning to ensure that brand India is forcefully presented to everybody at Davos.
Ministers from several state governments, including those of Tamil Nadu, Maharashtra, Telangana, Andhra Pradesh and Madhya Pradesh were also in Davos to attract global investors. Andhra Pradesh reportedly signed renewables investment pacts cumulatively worth about 1,600 crore rupees with 3 companies. The investment commitments were made with India's Adani Green Energy, GIC-backed Greenco, and India's Aurobindo Realty and Infrastructure. The Maharashtra delegation reportedly signed at least 23 MOUs worth 30,000 crore rupees. Of these investments, more than 55% are by way of FDI from the US, Singapore, Indonesia, and Japan. The team, led by Karnataka Chief Minister Basavaraj Bommai, inked MOUs with two major companies for a total investment flow of 52,000 crore rupees. India also took its vibrant startup story, already featuring daily in the domestic news, to the world stage. Consider the fact that along with several legacy leaders, the Indian delegation also included unicorn founders such as Zerodha's Nikhil Kamath, Ease My Trip's Prashant Pitti, Ashish Singhal of CoinSwitch, and Vidit Atre of Meesho. With the government proudly referring to the rise of unicorns in India, the founders were pleasantly surprised by the attention they were getting from delegates from India and abroad.
Joining me at Davos 2022 for a 1-minute conversation is Prashant Pitti. He is the co-founder of Ease My Trip. How's it been for you, Prashant? This is your first time in Davos?
This is my first time, and I'm loving it so far. This is just the second day, and I've rubbed off into so many great set of people. I'm really looking forward for the next few days. You know, honestly speaking, since it's my first time, I cannot compare it with the last time, but I am seeing brand India really exuberantly well accepted across the world. I was just mentioning this earlier to somebody that I met somebody at Indonesia Pavilion yesterday, and he was super excited that we could bring Ease My Trip to Indonesia because it's India tech. This is the kind of value and the confidence people have across in the world now on the tech which is India. The unicorn story of India has done absolutely well, and the world is looking towards India for the tech solutions now. On almost instantaneously, that person was like, "I'm willing to put in money and grow along with you. We'll see where it goes." But there was a lot of acceptance just because the tech is India, and he's saying that if you have built it for 1 billion people, it might as well work for my 120 million people work population.
India also adopted a strategy at Davos that was significantly different from previous years. The Indian delegation was focused on improving internal coordination. In fact, before the start of the conference, all the delegates were invited to share their views on India's position. Common responses on several crucial issues were also framed. India appears to have been able to project itself as a politically stable, economically dynamic, and growth-driven investment destination. This attracted investor attention despite the dark clouds of global recession risk, supply chain disruptions, the ongoing war, and energy shortages.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Back home, India's automobile sector is bracing for a big transition as more and more electric vehicles are hitting the roads. And so are those who will supply components to the industry. In an interview with Business Standard's Surajit Das Gupta, President of Automotive Component Manufacturers Association of India, Sunjay Kapur shares the preparation of component industry to meet the demand and also about the challenges, like the electric components, which Kapur admits is a choke point. Let's listen in.
Obviously, there is going to be, and it started already, a clear shift towards from the ICE to electric vehicles. So the industry obviously has to get prepared, and they are already preparing in many ways, etc. and all. So this change that you see, which will happen, what is the kind of roadmap that you have, say, in next 5 years?
Just because of adoption of EV, from a regulatory perspective as well as customer demand perspective is increasing, every day. From an India perspective, if you look at the two-wheeler and the three-wheeler segment, that's moving towards or converting from ICE to EV much quicker. From a global perspective, you're right. The number is very small at the moment in terms of percentage of vehicles globally. From a supply-based perspective, it means multiple things. One, gives companies an opportunity to supply into a brand new market segment, as well as an opportunity to supply more in terms of different components, because with electrification will come connectivity, will come telematics, will come autonomous, will the ecosystem, the infrastructure. So there's a lot of opportunities that will emerge with this whole electric vehicle revolution. As far as ACMA goes, we have close to 800 as 800 member companies in ACMA. The executive committee consists of most of the large companies, and 60%, when we did a survey recently, were ready to supply into electric vehicles, and 40% will be ready in the next year or so. So we're sitting in a good position in terms of readiness to supply to EVs. Just in the PLI alone, the auto component industry has 75 companies that will participate. The criteria demands that we invest 250 crores over the next 5 years for eligibility to gain from the benefits of the PLI scheme. So if you take that and multiply that by the 75 companies, you're looking at an 18,600 crore investment just by way of that. And that's a minimum investment. I feel that most of the investment that will happen today in the auto component industry, other than capacity enhancement or increase in capacity, and that's also because numbers are going up. Commercial vehicle has come back. Those numbers are going up. So, we're going to have to increase capacity in that sense. Most of the new investment will go into supply to electric vehicles. And to justify this in terms of volumes, we're going to have to look at the global market.
Do you see this whole move in the next 5-6 years? You will see our auto component global company as sort of something like a Bosch coming from India, which sort of...
Absolutely. I mean, that's really the aim. We need to build the next Bosch or the next ZF. And to do that, again, I come back to, we're going to have to continuously invest in technology, invest in talent, and, put the resources where we're required to put resources, and just keep, working towards building better products that are future ready, that are, that can, sort of cater to what the end consumer demand is. So if you look at companies like Bosch, their success really has been in innovation. And, we as Indian companies are going to have to innovate more. R&D and testing is extremely important. Today, our spend on R&D is very low compared to
what is it at an average?
It's in the industry average is 0.5%. So, it needs to be, I would say, north of 3%. We need to invest more in technology. And that's the way we can build the next Bosch from India.
What is the size do you think the Indian market would be, say, around over 3 to 5 years down the line? What is the...
So I think, it'll definitely be north of 5 million, right? We're already the fourth largest in the world. The 18,600 is investment in future technologies. It doesn't necessarily mean EV.
Okay.
So let's be very clear on that, because I know, there's a lot of confusion in this. When the government came out with this scheme, they're talking PLI scheme, they're talking about investment in future technologies, which obviously gives you a benefit in terms of bringing a technology into India that doesn't exist. This could be for localization, and it can be for export. So there's a mix here. If you look at last year, our exports from ACMA grew for the auto component industry grew 76%. If you look at China Plus One strategy, that's also something that we will definitely benefit from. I recently read a report that Apple is moving a lot of production from China to India. So business will come to India not because of cost, but because we have superior technology. So we're going to have to invest in technology. And given the fact that the PLI schemes are encouraging companies to invest in future technologies, that's really in the direction we're headed. And that will result in more business opportunities from outside of India, as well as deep localization, which then relieves us of the dependence on imports.
You have to look at a global market for electric vehicle components. So are there areas where, or specific areas where we have the strength where we could sort of be the sort of export hub to the world?
When you look at steering, you look at drivetrain, you look at all these components, even motors now, the R&D spend, everything is increasing in terms of us being able to supply, create a global hub for manufacturing in India. I think the choke point really is electronics. And that's something that we're going to have to invest heavily in. Even look at alliances between the automotive industry and the electronic industry to see how we can localize, the electronic in terms of building of electronics in India and reduce our dependence on imports.
Okay. Thanks.
Okay,
Thanks, Surajit. Thank you. Good to see you.
Bye. Bye.
क्या हाल?
मत पूछ यार,
फिर से स्टॉक्स में फंस गया। तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Let's move on to Dalal Street now. The markets are likely to end the month of May with notable losses as global cues, FII selling, and inflation-related worries weighed on the sentiment. Our next report delves into what lies ahead for the markets this week and a likely trading strategy.
Equities fought volatility and surged last week as stocks danced to the tunes of global cues, domestic news flow, and corporate earnings. Among indices, financials led from the front, while a steep cut in excise duty on fuel prices and capping of sugar exports saw stocks from these sectors react negatively. Eventually, the BSE Sensex moved in a band of 1,500 points and finally ended the week with 1% gain. The NSE Nifty 50, on the other hand, was up 0.5%, while the Bank Nifty surged nearly 4%. However, despite last week's gains, the benchmark indices may end the current month on a negative note, marking their biggest declines in May since 2012. The BSE benchmark Sensex and the Nifty were down close to 4% so far this month, primarily dragged down by the persistent FII selling. Foreign investors have now been net sellers for 8 straight months and have net sold stocks worth more than 52,000 crore rupees so far this month. According to VK Vijaykumar of Geojit Financial Services, FPI selling is showing mild signs of exhaustion. DII and retail buying, together with overwhelming FPI selling along with short covering, can trigger a near-term rally. High-quality large caps can stage a rally, says Vijay Kumar, adding that leading banks are safe bets. Against this backdrop, Business Standard's Avdut Bakar shares how banking stocks are placed on the charts.
The Nifty Bank Index has formed a double bottom, and even one could say there is a formation of inverse head and shoulder on the daily chart, which symbolizes an underneath positive strength. From here onwards, the momentum looks very strong, and as long as Nifty Bank holds 32,700 from a medium-term perspective, one could see a sharp rebound in Nifty Bank. The next hurdle for this index comes to 36,000 and 36,700, which is approximately 3.5% higher from the current price. In terms of its constituents, the banks in the Nifty Bank Index, one could be very positive on AU Bank, Bandhan Bank, and Bank of Baroda. One of the reasons for these three banks is they have successfully managed to afloat to stay above 200 days moving average during the recent correction, and investor community considers 200 DMA as the most relevant indicator while taking their investment decisions.
Markets will look at Q1 CY22 GDP number slated to be announced on Tuesday for fresh cues on the economic recovery. As per a Reuters poll of economists, India's economic recovery from the COVID-19 pandemic likely stumbled again in the first quarter of this year, primarily due to Omicron-related restrictions and higher inflation. Growth in Asia's third largest economy was penciled in at 4% for the January to March quarter from the same period a year ago, down from 5.4% in Q4 2021. If realized, that would be the slowest in a year and a third consecutive quarter of weaker growth. Amid these triggers, technical charts suggest that the NSE Nifty managed to close above its 20-day moving average for the first time since April 13, 2022. The Nifty may look to target the trendline resistance around 16,750 in the near term. On the downside, the index can expect support around 16,200 level. As we draw curtains on the Q4 earnings season, stocks like Aurobindo Pharma, Delivery, IRCTC, Jindal Steel and Sun Pharma could see some action ahead of earnings on Monday.
तुम इतना डर गए? अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
With stock markets flooded with IPOs, investors are busy analyzing valuation of each of these offers. So, should one use enterprise value as a method to judge a company or the embedded value? Our next report explains it for you and tells how can investors use them for their benefit. With a flurry of initial public offers hitting the markets, it's important for investors to pick and choose issues of fundamentally strong companies. It involves determining the economic value of a company and assigning a value to it. This process is known as valuation of a company. It includes an analysis of the company's management, its capital structure, its future earnings prospects, or the market value of its assets. While there may be a number of valuation-related terms that one can encounter, there are two terms that investors usually confuse. These are embedded value and enterprise value. Let's decipher both of these. Simply put, enterprise value is the entire value of the business without giving consideration to its capital structure, also known as firm value or asset value. Enterprise value is the total value of the assets of the business, excluding cash. So, if you know a firm's equity value as well as its total debt and cash balances, you can calculate the enterprise value via this formula. Enterprise value is equal to equity value of a firm plus debt less cash component. Here, equity value is number of outstanding shares multiplied by market price of one share. EV is the price that a buyer would typically pay for buying a company. During the valuation process, EV helps to enable business entity to find out the worth of a company and also find out the economic value of the business. Besides, it helps investors to easily compare different companies with different capital structures. Enterprise value also helps neutralize the stock market risk and helps to compare expected returns more effectively. Now, let us understand what is an embedded value and if it is any different from an enterprise value. Unlike enterprise value, which can be used across sectors, embedded value is mostly used for life insurance companies. The metric is used to estimate the consolidated value of shareholders' interest in an insurance company. The generic formula to calculate an embedded value is to add the present value of future profits of a firm to the net asset value of the firm's capital and surplus. It's sometimes known as Market Consistent Embedded Value or MCEV. The present value of future profits captures projected future profits from in-force policies, while net asset value of capital and surplus represents the funds belonging to shareholders that have been accumulated in the past. So, why do insurance companies use embedded value as its metric and not enterprise value? According to valuation experts, life insurance business is very different from any other business due to the long-term mutual commitment of the customer and life insurers to each other. Therefore, the use of traditional ratios like price to earnings or price to book value would always make life insurance companies look overvalued. The correct way to value a life insurance player is to value the committed business from each policyholder over the lifetime.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
So both enterprise value and embedded value are methods to value an entire firm based on its likely profits. Life insurance companies use embedded value as its metric due to long periods of fund lock-in, while all other companies use enterprise value method. Well, that's all we have for you today. We will be back with more news and analysis in our next episode. Stay tuned. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.